Hi guys, welcome to my YouTube channel. Today we will talk about best investing ideas. After a bout of high inflation and the Federal Reserve rapidly raising interest rates, investors may still be reeling. With many top economists fearing a recession could be right around the corner, some investors may think there's no good place to invest. But extend your investing horizon and the rest of 2023 could set you up for good returns later on. Why invest? Investing can provide you with another source of income, fund your retirement, or even get you out of a financial jam. Above all, investing grows your wealth, helping you meet your financial goals and increasing your purchasing power over time. Or maybe you've recently sold your home or come into some money. It's a wise decision to let that money work for you. While investing can build wealth, you'll also want to balance potential gains with the risk involved. 1. High-yield savings accounts. Online savings accounts and cash management accounts provide higher rates of return than you'll get in a traditional bank savings or checking account. Cash management accounts are like a savings account checking account hybrid. They may pay interest rates similar to savings accounts, but are typically offered by brokerage firms and may come with debit cards or checks. Savings accounts are best for short-term savings or money you need to access only occasionally, such as an emergency or vacation fund. Transactions from a savings account are limited to 6 per month. Cash management accounts offer more flexibility and similar, or in some cases, higher, interest rates. 2. Certificates of deposit. A certificate of deposit, or CD, is a federally insured savings account that offers a fixed interest rate for a defined period of time. Best for. A CD is for money you know you'll need at a fixed date in the future, a home down payment or a wedding. Common term lengths are 1, 3, and 5 years, so if you're trying to safely grow your money for a specific purpose within a predetermined time frame, CDs could be a good option. It's important to note, though, that to get your money out of a CD early, you'll likely have to pay a fee. As with other types of investments, don't buy a CD with money you might need soon. 3. Bonds. Bonds can offer a relatively safe form of fixed income to their investors. Lower-risk bonds tend to pay lower interest than higher-risk bonds, including government or corporate bonds. A government bond is a loan from you to a government entity, like the federal or municipal government, that pays investors interest on the loan over a set period of time, typically 1 to 30 years. Because of that steady stream of payments, bonds are known as fixed income security. Government bonds are virtually a risk-free investment, as they're backed by the full faith and credit of the U.S. government. The drawbacks. In exchange for that safety, you won't see as high of a return with government bonds as other types of investments. If you were to have a portfolio of 100% bonds, as opposed to a mix of stocks and bonds, it would be substantially harder to hit your retirement or long-term goals. 4. Funds. Funds pool money from shareholders to invest in a portfolio of assets like stocks or bonds. The investing term funds often refers to mutual funds. 3 other common types of funds include money market funds, exchange-traded funds, and index funds. Money market mutual funds are an investment product, not to be confused with money market accounts, which are bank deposit accounts similar to savings accounts. When you invest in a money market fund, your money buys a collection of high-quality, short-term government, bank, or corporate debt. The money you may need soon that you're willing to expose to a little more market risk. Investors also use money market funds to hold a portion of their portfolio in a safer investment than stocks, or as a holding pen for money earmarked for future investment. While money market funds are technically an investment, don't expect the higher returns and higher risk of other investments on this page. Money market fund growth is more akin to high-yield savings account yields. 5. Stocks. A stock represents a share of ownership in a company. Stocks generally offer a larger potential return on your investment than lower-risk investments like government bonds, but also may expose your money to higher levels of volatility. Investors with a well-diversified portfolio who are willing to take on a little more risk due to the volatility of individual stocks. A good rule of thumb for investors is to limit their individual stock holdings to 10% or less of their overall portfolio. Where to buy stocks. An easy way to buy stocks is through an online broker. Once you set up and fund a brokerage account, You'll choose your order type and become a bona fide shareholder. Here are step-by-step instructions on how to buy stocks. 6. Alternative investments. If you're not investing in the stock, bond, or cash equivalent instruments listed above, there's a good chance your investment is part of the alternative assets class. This includes gold and silver, private equity, hedge funds, cryptocurrencies like Bitcoin and Ethereum, and even coins, stamps, alcohol, and art. Investors, accredited investors, in many cases, who want to diversify away from traditional investments and hedge against stock and bond market downturns. Where to buy alternative investments? While some online brokers will offer access to certain alternative investments, other alternatives are available only through private wealth management firms. However, there are ETFs, such as oil, gold, and private equity ETFs, that track the asset itself, as well as companies related to the asset, such as gold mining and refining companies. 7. Real estate. Traditional real estate investing involves buying a property and selling it later for a profit, or owning property and collecting rent as a form of fixed income. But there are several other, far more hands-off ways to invest in real estate. One common way is through real estate investment trusts, or REITs. These are companies that own income-generating properties, think malls, hotels, offices, etc., and offer regular dividend payments. Real estate crowdfunding platforms, which often pool investors' money to invest in real estate projects, have also risen in popularity in recent years. Investors who already have a healthy investment portfolio and are looking for further diversification, or are willing to take more risk for higher returns. Real estate investments are highly illiquid, so investors shouldn't put into an investment any money they may need to access quickly. What do you think of our video? Let me know in the comment section below. Also, subscribe to our channel before you go. Thanks for watching.